3 reasons why the market down today. 1. Primary reason, leveraged position unwind. Overview, a sharp liquidation cascade, concentrated in Bitcoin, drove the market lower. Data shows $162.24 million in BTC liquidations over 24 hours, a surge of 87.54%, with long positions accounting for the vast majority, $157.02 million. This forced selling likely triggered stop losses and amplified downside pressure across altcoins. What it means, elevated leverage in the system acted as fuel, turning a modest pullback into a broader correction. The rapid unwind indicates a market flush of overextended speculative positions. Watch for a slowdown in liquidation volumes, particularly in the 4H and 12H windows, to signal that the most acute selling pressure is subsiding. 2. Secondary reasons, sentiment and technical weakness. Overview, market sentiment has cooled, with the fear and greed index dipping to 42, neutral, from 52 last week. Technically, the market cap is trading below its 7-day and 30-day moving averages, and the MACD histogram is negative at minus $14.77 billion, confirming bearish momentum. What it means, the lack of bullish conviction made the market vulnerable to a sell-off. The decline in the altcoin season index, minus 5.56% in 24H, shows capital is not rotating into higher-risk assets, reinforcing a defensive stance. Watch for a sustained move in the fear and greed index back above 50, neutral, to indicate a return of risk appetite. 3. Near-term market outlook. Overview. The immediate path hinges on holding key Fibonacci support between $2.49t, swing low, and $2.55t, 78.6% retracement. Upcoming U.S. economic data and ETF flow reports will test whether macro headwinds persist. What it means, if support holds, the market may enter a range-bound consolidation. A break below could see a test of the $2.4t level. Watch for a recovery in perpetual futures open interest and funding rates as signs of returning confidence. Conclusion. Market outlook, bearish pressure. The market's decline was primarily a technical unwind of over-leveraged positions, exacerbated by cautious sentiment. The near-term trajectory likely hinges on whether the $2.49t, $2.55t support zone can stabilize prices ahead of key macro catalysts. Will cooling liquidation volumes allow for a base to form, or will renewed selling pressure break critical support? This content is for educational and informational purposes only and should not be considered financial advice.